So we've come back and we are up to step 4. We've just done the journal to record the asset sale. Now we're going to post it into the ledger. So in the bank account we'll have a debit of 2,200. So this is on, what was the date? On the 1st of April 2012. Sale of mower, and we received $2,200 for it. Add to our balance. We go down to our GST clearing, 1st of April 2012, and we put in the credit $200 for GST to a $100 debit now in that account. And then finally we'll put the last $2,000 into our disposal of mower account. So, sale of mower, which was $2,000. Okay, which leaves us with a balance of $425 in our disposal account. Alright, now we move on to step 5. Okay, this is where we determine our gain or our loss on the asset and then transfer that to the gain or loss on disposal account. So what we need to do is have a look back at our ledger and look at our disposal of mower account. It's got a debit of $425. When you see a debit, you know that we've made a loss. So we originally paid $3,000 for it. We expensed $575 and then we sold it for $2,000. Because these amounts don't add up to the $3,000, it means we made a loss. If we'd sold it for $3,000, we would have made a gain because we were able to expense that and sell it for the price we paid for it. But in this situation, we've made a loss. So when we go back to our journal page, we will have an account called the loss on disposal of mower, and that's where we'll put in that $425. The other side of that will be the disposal account, so disposal of mower, because we want to bring that down to nil. Okay. If we'd made a gain, the gain would have been a credit, gain on disposal of mower, and the disposal of mower would have been a debit to then nil out that account. So if we now post that into the ledger, disposal of mower, the 1st of the 4th, 2012, loss on disposal of mower, which is a credit, $425, now equal nil. And then above here we've got the loss on disposal account, which is where we put the debit side, so $425 debit. That's a balance of $425. So this loss on disposal of mower is an expense account. So that would sit in your income statement as one of your expenses. So if we look at the next step, we're going to record the purchase of the new asset. So the same accounts as you would have used at the beginning. So mower account. So you'll have your asset account, mower account, GST clearing, and then we need to check whether we paid in cash for it or on credit. So in this one we paid in cash for the new one, so we'd use our bank account. The mower cost us $4,400, so $4,000 is the value of the mower, $400 is the value of GST, and those together add up to what we would have paid for out of our bank account. Okay. if I post those to the ledger, we'll put in the mower account 04/2012 purchase of new mower $4,000. So that puts in an asset for us. Oh, account. That. Where is it? This one. On the 1st of the 4th, 2012, we purchased a new mower. In our debit side, we'd put in the 4,000. 4,000 debit. That's our asset. The other side is our bank account. Where's it going? There it is. So we paid out of our bank account. So we'll have purchase of mower, which was 4,400, which will take off our balance there. And then finally, we've got to account for the GST. So we will have 04/2012 mower, and it was a $400 debit. Back to our journal page. Now up to the very last step. Okay, we need to record depreciation for this new mower because we bought it in April. Yes, bought it in April 2012. The end of the financial year is June 2012. So we owned it for all of April, all of May, and all of June. So that's 3 months. So if you remember when we did that in the diminishing value tab, what we've got in here is our $4,000 asset, diminishing value at a rate of 20%, and then we adjusted that formula, so 20% times by 4,000, and then we multiplied it by the 3/12 months. So you've already calculated that amount, $200. It's just a matter of putting in the journal and recording it in the ledger. So exact same journals as the beginning where we were recording our depreciation expenses. So depreciation expense account and accumulated depreciation. Okay, depreciation expense will be equal to that 2012 value, $200, and the accumulated depreciation will be the same. So if we now post those into our ledger, we had on the 30th of June 2012 depreciation, which will be equal to 200 in the debit column. Oh, wrong one again. Sorry, this is the credit one. So this is your accumulated depreciation account. Put it in the credit column. Gives us a balance of $200 credit in that one. If we scroll up to our depreciation account, put in 30th of the 6th, 2012, depreciation was equal to our debit of 200, which gives us a balance for the 2012 year of $425 depreciation. So we've got the depreciation we could claim on the old mower up until the day we sold it, 1st of April, and then the depreciation on the new mower from the day we bought it to the end of the financial year. So in total, we can claim depreciation of $425. And that's everything you have to do for that question. So that took me around about, 40 minutes to do it and explain it at the same time. So if you have a really good understanding of how to do this process, it really shouldn't take you that long at all. So that's really good news. Fantastic. Not so hard after all. Awesome.